Welcome to TheoTrade. This is Don Kaufman. It's September 9th, 2019, and you are watching the TheoTrade evening video. There's just a few minutes to go to the cash close, and the S&Ps are, well, largely unchanged. Nasdaq down negligibly in what is kind of amounting to a rather light day in terms of overall trade. Now, in a moment, I'm going to try to answer the questions. Have the financials really gone too far, too fast? Before I get there, let's actually discuss some of really the larger trade that's occurred in today's session. One of the very first things I want to point out, as I said, it's kind of a light, mild trading day. Listen, the S&Ps, they're barely clipping over 1 million contracts. What else do we see on the screen? Volatility not giving up an inch inside of today's trading session. Another thing that is extremely important to continue to point out is that there is still a, albeit mild, backwardation still inside of the volatility futures. That happens to be the 72-day volatility futures are still north of the 100-day volatility futures. So effectively, as long as you've got any degree of inversion in these volatility futures, don't trust this market as far as you can throw it. There's another very large takeaway. Before I get to the bonds and before I get to the financials, a really couple large takeaways today. One of them of which has everything to do with the advanced decline line. Again, over the last few weeks of trade, and you take a look at the S&Ps for a second, and you look back at the last couple of weeks of trade, in the midst of a lot of this volatility, and again, the entire time we were inside of this volatility box, okay, correlation coefficients were like almost 100%. What that amounts to, and again, I want to make sure that everybody understands what that correlation kind of coefficient means. It simply means the advanced decline line, if you will. For example, on days that we were down, there would be 95 stocks, for instance, out of the S&P 100 down on the day. It'd be like, a 5 to 95 advanced decline line. And vice versa. On big up days, you'd have 93 to 95 stocks trading to the upside. Again, in stark contrast, the moment that we came outside, again, of this volatility box, right now, we're in a veritable slop fest again. Okay, so when I say a slop fest, well, look no further than right here, people at the advanced decline line. That pretty much constitutes a 50-50 slop fest out there. And what you're getting in this slop fest, it's rotations. What I mean by rotations is just take a quick glance. I mean, here, the financials, hey, look, they're up, what, 1.5% today. That's a big move. Meanwhile, apparently they're rotating out of some of the monsters of tech. The monsters of tech is Microsoft and Apple, okay, and Facebook and Amazon and Google. Let's not forget, yes, Apple has a big announcement tomorrow. I don't know how big it's going to be, but Apple has an announcement tomorrow. The other aspect that really begs and has a big question mark behind it, there have been a handful of what I want to term marquee underlyings and have been involved in the most recent rally. One of those, for example, is Costco, which is just having an outright wicked kind of key reversal in today's trading session. It's down, almost 1.5%. If it was Costco alone, I wouldn't look at that as any cause for concern, okay? But you've also got Target right there with it. Again, we're all of a sudden going from highly correlated markets back to cyclical rotations, right? Right now, everybody's bailing out of Target. Again, all right, it's just Costco, it's Target. The market caps are not that magnificent in either one of those. Yeah, another one that's actually high on that list happens to be none other than Starbucks. Starbucks looks like it's fully coming apart at the seams over here, even breaking to the downside. Okay, another in terms of like technology that's just been an immovable force has effectively been Microsoft seeing a little bit of sell side activity. Again, we've got a number of key products and even push Microsoft aside, a number of key products like Costco, like Target, again, like Starbucks, which have been, buy anything at any price that are now seeing, rotations on out. Keep this in mind inside of the next few days of trade? Could it be the beginning, again, of the end for a handful of these individual stocks? And with that idea, okay, the interesting thing is Walmart has actually been kind of one and the same. Walmart yet is bid up today. Walmart may be opportunistic for a short position, possibly in the days to come, if the rotations out of Costco and Target and Starbucks kind of continue, right? So if sell side continues in Costco and Starbucks and Target, you may see some sell side activity eventually come to a Walmart near you. All right, push that aside for just a moment. Let's answer the big question. Okay, financials, too far, too fast. It is a blistering rally to the upside in the financials. Specifically, I like to look at the XLF. You can look pretty much any of the financial products. Okay, these things are just ripping right now to the upside. Again, I'm going to drop back to the XLF. So why do I even bother to kind of question these particular products? Well, okay, first of all, there's some sell side activity. Okay, some fairly decent sell side activity inside of the bonds. I mean, it's a couple. There's the closing bell. It's a couple of, down days now that we're getting inside of the bond market. Now, I already tried to answer that question, are bonds in a bubble, okay, last week. But here we have the bonds are selling off. Because the bonds are selling off, that is bringing the associated interest rate up. Okay, so here we actually have the 10-year. The 10-year, it's been on, a wicked slide to the downside. It's now bid back up. The moment that interest rate comes back up, the financials love it. Why? Come on, higher rates. It's all warm and fuzzy for the financials. But if you look at the bounce inside of this interest rate, okay, you have to question because the financials are way ahead of the bounce inside of the interest rate. The other thing that you have to start to question is you have to recognize that everybody in terms of a central bank, they're all coming out starting effectively this week. If you haven't looked at a calendar, okay, you should. Starting on Thursday, on Thursday we have an ECB announcement. It's actually one of Mario Draghi's last meetings as the head of the European Central Bank. So what's he going to do? Well, at the very least, they're likely to cut more negative. They're going to go more negative into the interest rate. What else are they going to do? They may actually kick back on their bond buying program. But the ECB is just kicking it off. By the way, okay, China actually did their version of quantitative easing starting last Friday, so the ECB is technically the second one in line. Then you come into next week. Oh, the next week is chock full of central banks. It's like central banker week. We kick it off on Tuesday with the Bank of Japan. Oh, yes, the Bank of Japan. Wednesday of next week is none other than an FOMC meeting. And then on Thursday, let's round it out with, again, Bank of England and Swiss National Bank. It's a central bankers party out there. And you have to recognize that every one of these central banks, what are they going to do? Okay, they're all going to ease in terms of monetary policy. If they're going to ease in terms of monetary policy, that isn't interest rates going up, that's interest rates going down. Shouldn't we maybe see the bonds get a little bit of a bid back? The sell side activity in the bonds may only be short-lived. Be extraordinarily careful inside of the financials, which actually brings me to the last kind of piece of the puzzle. That's this. The financials, they are directly responsible for the most recent upside move inside of the S&Ps. Okay, unequivocally, what drove the S&Ps out of the volatility box is none other than those financials. The financials continue to run, but the S&Ps have now effectively stalled. All eyes right now need to be on those financials in the days to come. I think they're going to be extraordinarily opportunistic and very likely have gone too far, too fast. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.